Thank you for joining me. I'm Alexandra, and I want to talk about Wells Fargo. So, what they do is banking, obviously, quite famously. There was a bit of a scandal recently, and by recently I mean a few years ago, but still. And they've been in the news. So, stock price $39.39, which gives them a market cap of $163 billion. Revenue $72.3 billion, which is down $13 billion, which is not great. Earnings $3.3 billion, which is down, $16 billion, which is also not great. And that gives them a PE of 94 with a forward PE of 16. If they can hit the forward PE, obviously pretty decent. Kind of in line with other banking stocks, and I would probably prefer that. Dividend yield just over 1% with a payout ratio of 298%, which is also not great, but obviously if they can get back to a PE of 16, that would be fairly low. Total assets $1.9 trillion, total liabilities $1.8 trillion. That gives them a total stockholders' equity of $185 billion. Obviously nice. There's some other big banks that have a stockholders' equity higher than the market cap. I always see that as a pretty good sign, but there is a decent chance that some of the assets of, almost $2 trillion might just get written off, and that, only 10% of that would need to be written off for them to have a negative equity, but obviously very unlikely. So risk factors, clearly global pandemics. Banks are fairly stable. If oil goes to hell, a company with almost $2 trillion in assets probably wouldn't do too well, but I haven't really looked into how much of their investments is backing oil, so who knows really. Overall, I would not really be upset about a revenue drop or an earnings drop that was this significant, because obviously whatever happened last year, but both the revenue and the earnings had dropped in 2019 as well, and that makes me slightly concerned, and that would probably be the main reason that I wouldn't buy this stock. Obviously, both Citibank and JP Morgan Chase have pretty similar stats, mostly better actually, and they didn't have a revenue decline in 2019, so I think that would be a better investment here. Obviously, for a growth investor, big banks are never great. For a dividend investor, just over 1% dividend, wouldn't really buy it. I just think that the dividend is way too low, and you can find so many other companies with a higher dividend yield. For a value investor, obviously the balance sheet is nice. If they can get to the forward PE, that would be nice as well. And if things going back to normal, obviously the payout ratio would be pretty low. So the stockholders' equity being higher than the market cap makes this probably a reasonably strong buy. So if you like big banks, I think that this would be a decent investment for a value investor. Obviously, look into the stock yourself, do your own research. That's it for me for today. If you like this video, make sure to subscribe. I'm coming up with more videos every day before market open. I hope you have a successful day.